Welcome to The Explainer. You know, every time you ask a chatbot to write a quick email or, say, generate an image, it kind of feels like weightless magic, doesn't it? But behind that magic is a massive, hidden, and honestly incredibly expensive physical machine. Look, AI has rapidly become the absolute biggest tech race we've seen in decades. So today, we're zooming in on exactly that. The sheer physical scale of the artificial intelligence revolution and the unbelievable financial bets being placed to completely dominate it.
And to really wrap our heads around the scale of what we're talking about here, we've got to start with a staggering number, $44.9 billion. I mean, just let that sink in for a second. This isn't some startup valuation, and it's definitely not projected revenue. This is the amount of cold, hard cash Google is pouring directly into AI infrastructure. It's quite literally one of the largest single bets in the entire history of technology.
But, as you might guess, when Wall Street saw the sheer scale of the spending, well, a very real anxiety started rippling through the market. It led to one rather skeptical question. Are they building the foundational future of tech, or are they just spending way too much, way too quickly? That high-stakes gamble is exactly the narrative we're going to unpack today.
Section 1. The hidden cost of AI. Understanding infrastructure scale.
Okay, let's dive right into this. To really understand this astronomical price tag, we have to completely shatter the illusion that AI is just this weightless software floating somewhere up in the cloud. The reality? It is heavily, heavily physical. This race is no longer just about writing the smartest algorithm. We are talking about millions of servers running red-hot 24/7. It requires thousands of highly specialized, wildly expensive chips, and it demands the construction of sprawling data centers that suck up so much electricity to run and cool down, they practically need their own power plants. This is the very real physical machine behind the AI.
And this highlights a massive paradigm shift happening right now in Silicon Valley. Think about the old tech wave. Software and code were your main competitive advantages, right? We all know the classic stories of a couple of kids in a garage writing a killer app and completely disrupting an entire industry. But the AI era? Yeah, software is only one piece of the puzzle. You absolutely cannot build this in a garage anymore. Hardware, massive physical computing power, and direct access to raw electricity, that's what dictates the winner now. To run the smartest AI, you literally have to build the biggest physical infrastructure, which means you need billions in capital just to keep the lights on.
Section 2. Google's hardware strategy, winning the next generation.
Now, what's really interesting here is how exactly Google is deploying all that capital to win this next generation of computing. They're taking a completely custom approach. See, traditional processors just aren't powerful enough for the heavy lifting that AI requires. So Google went ahead and engineered their own Tensor Processing Units, or TPUs. These are custom-built from the absolute ground up, designed specifically by Google to handle the billions, and I mean billions, of calculations happening in the blink of an eye during heavy AI workloads. By designing their own TPUs, Google's strategy becomes crystal clear. They are securing their own supply chain. Think of it like a gold rush. The folks who usually make the most money, they're the ones selling the pickaxes. Well, in this modern AI gold rush, Google is basically manufacturing its own incredibly rare pickaxes so it never has to wait in line. Instead of relying completely on outside suppliers for these rare, super expensive chips, Google is gaining total technological control.
Section 3. The Infrastructure War, a historic spending race.
Of course, Google isn't placing this massive bet in a vacuum. If we zoom out a bit, we are watching a massive infrastructure war unfold in real time. Everyone is aggressively staking their claim. Microsoft is pouring heavy investments into their infrastructure through that huge OpenAI partnership. Amazon is rapidly expanding its already dominant cloud AI capabilities to make sure they don't get left in the dust. And Meta? They're busy building out enormous, unprecedented AI computing systems of their own to fuel their open-source models. Across the board, every single tech giant is going all in. It is a full-blown arms race.
And the reason they're all fighting this war so fiercely comes down to one crucial point. AI models are only getting larger and way more powerful, and larger models require more physical resources, period. Therefore, whoever wins this physical land grab is essentially going to control the foundational layer of the future economy. They'll be the ones deciding the capabilities and ultimately the cost of the tools you and I will eventually rely on.
Section 4. Boom or bubble, the investor dilemma.
So this brings us to the mounting tension between the cash being spent today and the reality of tomorrow's returns. Investors are naturally looking for proof of a real return on investment. And to get there, these companies have to clear an incredibly difficult obstacle course. Step 1 is hard enough. They have to actually create new tangible AI revenue. But step 2? Even harder, they must maintain strong profit margins despite the astronomical costs of running all those red-hot servers we talked about. And then step 3, they have to ensure the consumer and enterprise demand keeps growing at a pace that actually justifies this endless spending. History proves time and time again that revolutionary tech alone doesn't guarantee a successful investment. You got to be able to monetize it.
But let's be fair, there is a very strong bull case to be made for Google here. They have an incredibly sturdy foundation for success. They already operate a massive global cloud business. They have an unparalleled roster of engineering talent backed by years of deep AI research. But crucially, they already have billions of existing users. Google sits right there on our phones, in our browsers, and in our daily work routines. This gives them an automatic built-in pipeline for whatever AI they build. If AI truly becomes deeply integrated into everyday tech, Google is uniquely positioned to have this massive investment pay off for decades to come.
So we're basically left weighing two very different historic outcomes. In the bull case, AI isn't just some short-term trend. It becomes the foundational layer of all future computing, kind of like the internet or the smartphone did. In that scenario, today's heavy spending is going to look like a brilliant, historic bargain. But then there is the bubble risk scenario. This is where expectations are just moving way faster than financial reality. Just like previous tech booms, we could easily see a reality where some companies emerge as industry leaders, while others completely overspend, fail to generate returns, and face immense, crushing pressure from Wall Street.
Which leaves us with this final, lingering question to ponder as we watch this space over the next few years. Will Google's massive $44.9 billion bet become the foundation of an unstoppable AI empire? Or will it go down in history as technology's most expensive mistake? The race is on. The chips are literally down, and the entire future of the global economy might just depend on the answer.